Hello, I'm Robert Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification of when we release a new video. You'll be very pleased that I'm not sitting here in the outfit I wore on Friday for our pink day. Michael refused to shoot, so we're shooting on Monday.
Wasn't me wearing the tutu.
We know in some circles I'm known as Mr. Like and Subscribe. I'm certainly that name would have changed had I done that on Friday. But Michael, we obviously we're kind of in a little bit of a holding pattern at the moment. There's not massive things happening, but there are a few things. First of all, maybe Mr. Trump and the Chinese seem to be coming to a mild truce there.
Yeah, I think so, Robin. I suppose it's the way of politics, but there's a lot of bluster, there's a lot of threats, and then they get round the table and try and hammer some sort of deal out. So on Thursday, yeah, there was a sort of maybe a truce in the trade war between China and the US is probably the better way to put it. The US dialing back some of the tariffs that they have threatened, and then China also especially dialing back on the rare earths and all the licensing and the things that they required around that. So I don't think that, Chinese data came out this morning. The PMI index, which is a sort of gauge of manufacturing, was a little bit weak. But one of the areas that was weak was actually the sort of new orders. And I think that really reflects again, in October, just remember at the beginning of October, Trump then threatened another 100% tariffs on China.
Yes.
And you can see in some of this high frequency data that uncertainty permeates through. So suddenly there's a sharp drop off in new orders. Everybody's like not quite sure where to go, but that should moderate now that there's sort of some sort of deal. I think the other thing that we mustn't lose sight of, Robin, is that the US shutdown now enters its second month. It's the government's been shut down for essentially a month and 2 or 3 days now, and there doesn't seem to be a huge amount of progress or on the horizon. I mean, I suppose progress can happen at any time, but yeah, it's starting to bite, and economic data is becoming a bit scarcer. Last week we had the Federal Reserve cutting interest rates, but then it pains to point out, please don't assume that we're going to cut in December as well. But interest rates are falling in America, which is a good thing.
Michael, some would argue that we've had a government shutdown for a lot longer than 2 months here.
Since 2008.
Something like that, yeah. But obviously bringing it back into the local space, we've got this dichotomy between we were watching the Mlunga Commission and the Parliamentary Committee on our police. But while that sort of drama is happening in the press, there's quietly positive things coming out on the economic side, aren't there?
Yeah, Robin, actually, amazingly, October was a good month for markets. So what's driven the market so far this year has really been the gold and the platinums. They pulled back on October quite sharply in some cases, sort of 10, 15%. But I think, the gold price fell from, what did it reach, a high of $4,300 or... Sorry, I can't remember the exact figure off my head, but the gold price is now around $4,000, a healthy correction in an otherwise very long-term positive trend. But we know that commodity prices are volatile. So gold and platinum have pulled back a bit, and so the shares associated with that pulled back. But actually what we've seen in October, Robin, is a very strong month for some of the more local orientated shares, especially the financials. So the banks, the insurers, Old Mutual and Sanlam had capital markets days, which is just really an investor day, highlighting some of their strategic goals. I think those were very warmly received by investors. Property had an excellent month, up I think 7 or 8% for the month. And yeah, I think, Robin, again, we've talked in the last couple of weeks about falling bond yields at the lowest in sort of 7 years, and this month we're going to have the medium-term budget. So basically what's happening with bond yields, so last week government revenues came out. Those were running ahead of expectations. Yes. SARS is, they pay your taxes, SARS is running ahead of budget, so that's a good thing. But government revenues and the whole government budget balance is essentially ahead. So in the medium-term budget, I think there's a good chance that government drops the issuance every week for how much bonds they're issuing. So at the moment, they issue 4 billion rands worth of bonds every week.
Yeah.
They're quite likely to drop that maybe to 3.5 or 3 billion or something like that. And that's obviously very supportive of the bond market, because even at 4 billion, there's more demand than,
yeah.
And so if you're dropping that, then there's obviously going to be a scramble for bonds every week. And bond yields are falling, so government doesn't need to obviously raise as much money because they're raising at a cheaper rate. And so some of the negative effects, Robin, that have been, that negative cycle that's been with us for sort of 10 years, we're just starting to see a sort of more slightly positive, virtuous cycle. The rand is a bit stronger, so inflation is a little bit more contained. So just some of the pressures that we've been facing that never seem to moderate are moderating a little bit. So it's not to say that everything's out of the woods. There's still consumer pressure. Retail companies coming out and saying the consumer's under pressure. We talked about. We wrote an intuition probably 3 months ago about the scourge of online gambling. Now that's making headlines everywhere, and so there's still a lot of pressure points, Robin. But I think, as we always say in markets, it's always about the second derivative of what's going on. It's not about whether things are improving or not. It's the rate of change. And if the rate of change starts to improve or accelerate, then markets get very excited about that. So there is some. October was actually quite a good month for local assets. Not maybe offshore markets were positive, 2-3%. Also, we're having some big results out of the Microsofts and the Amazons, and these guys are investing hugely. I think Amazon's run rate on investments is $135 billion over the last 12 months. It is a lot of money. That's GDP of a small country almost.
Exactly.
But they're making money out of these investments. As AI is making money for these big American firms. So I think markets are. There's still concern about slowing growth, Robin, and things, but I think markets are generally content, There's always going to be volatility, but we must watch the slowdown. But locally, there's some stuff to be positive about going into Christmas. It's obviously Black Friday month. So get all your specials ready. I'm sure there'll be some good deals this year.
Don't gamble it away, because you need to spend it. And exactly. I did say to the team this morning that they needed to do their Christmas shopping and make sure they didn't start doing their wife's Christmas shopping on Christmas Eve like most men do. So we are giving that warning. But Michael, thanks for giving us that insight, and thank you for joining us. Please don't forget to like and subscribe, and we'll catch you next time. Bye-bye.